On behalf of Bodal Chemicals Limited, I extend a very warm welcome to everyone for joining us on our call today. On this call, we are joined by our CFO, Mr. Mayur Padya, and SGA, our Investor Relations Advisor. I hope everyone had an opportunity to go through the financial results and investor presentation, which has been uploaded on the stock exchange and on our company's website. To begin with, I will give you a quick overview on the recent developments in the chemical industry and our company. And then Mr. Padya will walk you through the financial performance for the quarter. During the quarter, prices of basic raw materials went up significantly, led by a surge in coal prices and lower supply from China. Recently, challenges around the international supply chain eased to some extent in the quarter, but freight costs continue to remain higher than usual. China seems to have recovered from its power and coal crisis, relieving the pressure on the international raw material supply to some extent. The Indian textile sector is seeing a structural turnaround, and Indian players have benefited on account of Chinese supplies losing the market share. This in turn has elevated demand for the dye stuff in India. With over 3 decades of experience, Bodal Chemicals is India's largest integrated manufacturer of dye stuffs and dye intermediates. In the domestic market, our market share stood at 13% for dye stuff business, 20% for dye intermediate business. In the global market, our market share stood at 3% for dye stuff and 6% for dye intermediate business. In today's environment, where Indian suppliers are emerging as preferred partners globally, we have been able to leverage our leadership position. We have meaningful capacity across various products to serve the demand of end-user industries. Basic chemicals such as sulfuric acid, chlorosulfonic acid, oleum, beta-naphthol, acetanilide, and others, which are used as key raw materials in the production of dye intermediates, are part of our core product portfolio. We are expanding our product basket, including benzene derivatives and chloralkali products, which have applications in pharma, agrochemicals, paper, and other industries. We are moving forward with a very focused mindset and adding additional capacity across multiple products. The performance overview of the company. Consolidated total revenue for the 9-month FY22 stood at 1,468 crores, which is the largest ever 9 months production for the company. This growth was primarily driven by a better product mix and a higher price realization. Rising end-user demand and structural demand shifts as a result of global supply-side tightness have also helped Indian manufacturers like us, who operate on a large scale. This trend is also visible in our dye stuff business, where we are not only developing a positive client relationship, but also solidifying our reputation as a quality manufacturer in the global market. We will now touch upon each business vertical and its recent developments. Dye stuff. Its end applications include textiles, leather, paper, and other dye stuff consuming industries have been doing very well during the last few quarters. The dye stuff business has grown significantly in 9-month FY22 with revenue of 512 crores compared to 263 crores in the same period last year. All key products in the dye stuff category have performed well, as overall capacity utilization has moved northwards. With various sectorial tailwinds in the textile sector, the prospects for the dye stuff business look bright going forward. Coming to the dye intermediates sector, Bodal is an integrated dye stuff manufacturer, and we produce 25 dye intermediate products. And over 40% of these intermediates capacity is captively consumed, resulting in a significant cost advantage for our dye stuff products. Given the healthy prospect for dye stuff, we strategically intend to move up the value chain, increase our captive consumption of dye intermediates for dye stuff. Other than captive consumption, we also sell our dye intermediates in both domestic as well as global markets, and we enjoy a leading position in the domestic market. During the quarter, this segment also witnessed a healthy trend. Prices of dye intermediate products such as H acid and vinyl sulfone surged during the quarter, reaching 270 rupees per kg for vinyl sulfone and 470 rupees per kg for H acid. And the benefit of the same is reflected in Q3 FY22 result. I am glad to share that we have commercialized vinyl sulfone's capacity at our subsidiary SPS processor. Ramp up of this capacity will happen in coming quarters. Basic Chemicals division, we manufacture a range of basic chemicals like sulfuric acid, chlorosulfonic acid, oleums, beta-naphthol, acetonolide, which again help in terms of vertical integration for dye intermediates and help in improving the profitability of the company. Close to half of the basic chemical capacity is captively consumed for dye intermediate production. Our overall basic chemical segment contributed around 9% of our total revenue during this 9-month period. Chlor-alkali business. In Q1 FY22, we acquired our Rajpura, Punjab unit from Mawana Sugars. This unit produces various chlor-alkali products like caustic soda, stable bleaching powder, hydrochloric acid, sodium hypo, spent sulfuric acid, chlorine, hydrogen, etc. The Indian chlor-alkali industry witnessed strong tailwinds for the quarter and healthy demand for caustic soda, our key product in this unit. Caustic soda prices were at an all-time high during October and continues to remain elevated. This unit works on a very old technology, and we have earmarked a capex for an upgrade, which will help us increase the caustic soda capacity to 99,000 tons per annum from the current production of around 60,000 tons per annum. This is a new segment for our business, hence year-on-year comparison is not possible. The chlor-alkali business reported a robust performance in this 9-month FY22 period with revenue of 180 crores, driven by a healthy volume uptick and soaring caustic soda prices. We are confident that demand for FMCG, textile, paper industries will be sustainable, and we will be their reliable and preferred partner. At full capacity, we expect this unit to generate additional revenue of around 300 crores at optimum levels, with the EBITDA margins in the range of 20 to 22%. Benzene derivatives and sulfuric acid at Saykha. Our Saykha greenfield project is in progress, and we plan to have it commercialized by Q1 FY24. Under benzene downstream products, we will be manufacturing products like MCB, PNCB, ONCB, MNCB, DNCB, PNA, 2,4-DNCB, and MPDSA, which are used in pharma, dye intermediates, specialty chemicals, and agrochemicals. We should be able to sell these products to our existing basic chemicals clientele, and partly will be used for our captive purpose. The capacity of sulfuric acid and derivatives will be 340,000 tons per annum, which will include sulfuric acid, oleum 23, oleum 65, liquid SO3, chlorosulfonic acid, liquid SO2, etc. We will set up a 4-step integrated product chains, which will lead to cost efficiency, better productivity, and higher margins for the company. We expect this project to generate additional revenues of around 550 crores at optimum utilization levels, with EBITDA margins in the range of 15 to 18%. 33% of our total business came from exports. Hence, the increase in freight and transportation costs has increased our other expenses considerably. Some of the other developments, we are doing business in 45 plus countries and have a basket of 200 plus products. This diversification requires intense working capital resources for managing inventory of key raw materials and finished goods, along with a large transit time for export markets. In event of supply chain tightness, we prefer to keep inventory and serve our customers' requirement in less time frame. We have established various trading and marketing subsidiaries to create a stock point and penetrate the new geographies and clients. Our Turkey subsidiary, Senarboya sales dispatches have improved meaningfully. Bodal China has also performed well and ended a 9-month period with a PAT of 2.4 crores. SP has also performed well with a significant growth in top line. In a medium to long-term view, these subsidiaries will penetrate the respective region and will bring meaningful business to our company. Our top 3 strategic objectives would be to ramp up our existing capacity, commercialize our vinyl sulfone capacity at Koshi unit, and complete the Rajpura project by Q3 FY23 and Saykha by Q1 FY24. We have been moving up the value chain and working towards diversifying the business from our core dyestuff and dye intermediate business to other specialty chemical products like benzene derivatives and chlor-alkali products. The world is recognizing India as the world's emerging second largest manufacturing hub, and this will benefit all manufacturers, including chemical manufacturers. Many Indian chemical companies have benefited from the favorable opportunities in recent years. Furthermore, stringent restrictions and compliance have inherently redirected demand to organized players like us. Indian chemical companies like us are poised for growth owing to increasing preference for a sustainable partner. Thank you. And now I hand over the call to Mr. Mayur Padhya to walk you through the financial performance.
Good evening, everyone. Overall performance of the company has been healthy for the quarter gone by. Our operational facilities are running at the pre-COVID level now. This growth is driven by better price and product mix. As far as standalone performance is concerned, we did total revenue for Q3 FY22 at 514 crore, a growth of 53% year-on-year basis. EBITDA stood at 73 crore in Q3 FY22, which is at the growth of 90% year-on-year basis. Net profit for the quarter stood at rupees 42 crore, a growth of 84% year-on-year basis. Our standalone performance for 9 months is as follows. Total revenue stood at rupees 1,343 crore, a growth of 82% year-on-year basis. EBITDA stood at 182 crore, a growth of 265% year-on-year basis. Net profit stood at 101 crore, growth of 462% year-on-year basis. Consolidated performance is as below. Total revenue stood at rupees 568 crore for Q3 FY22, growth of 52% year-on-year basis. EBITDA stood at rupees 56 crore for Q3 FY22, a growth of 23% year-on-year basis. Net profit for the quarter stood at rupees 20 crore for Q3 FY22, degrowth of 26%. Turkish lira has been volatile and has impacted our subsidiary Sener Boya and book foreign exchange loss of around 18.7 crore. Impact of the same has already been incorporated in consolidated financials. Our consolidated performance for 9 months FY22 are as follows. Total revenue stood at rupees 1,468 crore for 9 months FY22 against rupees 810 crore of 9 months FY21. This included export of 33% and domestic sales of 67%. EBITDA stood at rupees 162 crore in 9 months FY22 against rupees 56 crore of 9 months FY21. Net profit for the 9 months FY22 stood at rupees 70 crore against rupees 18 crore of 9 months FY21. 9 months FY22 performance of key subsidiary were healthy. SPS posted revenue of 103 crore, a growth of 47% on year-on-year basis. BCTPL subsidiary reported a revenue of rupees 6 crore. Sener Boya has reported total income of 70 crore, a growth of 26% on year-on-year basis. Total income from Chinese subsidiary was rupees 32 crore, a growth of 175% on year-on-year basis. Segment-wise performance on consolidated basis for the 9 months FY22 are as below. Dyestuff revenue stood at rupees 513 crore, a growth of 96% on year-on-year basis. Dye intermediates revenue stood at rupees 522 crore, a growth of 42% on year-on-year basis. Basic chemical revenue stood at 133 crore, a growth of 55%. Fluor-alkali division and TCCA revenue stood at 180 crore and 24 crore respectively for 9 months FY22. Total production volume on standalone basis for 9 months FY22. Dyestuff reported 15,673 metric ton. Dye intermediate reported 18,817 metric ton. Basic chemical reported 1,65,815 metric ton. Chlor-alkali stood at 58,203 metric ton, of which caustic soda stood at 42,738 metric ton. TCCA stood at 1,270 metric ton. With this, I conclude the presentation and open the floor for further question answer.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. First question is from the line of Aditya from. Please go ahead.
Yeah, thank you for the opportunity. Sir, first question is on the other expense part. So in other expense, how much is the freight cost in this quarter as compared to last quarter and in the similar quarter of the last financial year? Also, if you can highlight the quantum number of increase on YOY basis.
I don't have the exact number at present, but freight cost, whatever is increasing, that we pass on to our customer. So whenever we quote to customer, at that time we consider the present freight price and add on that price to the quote. So the freight increase is become part of our revenue. At the same time, it is expense also.
Okay, sir. If you can tell me the average of the last 4-5 quarters, and how much would that number be above the average? Just a short ballpark idea, if you can give. Like, just want to understand how much increase is there in the exports, in the freight part.
1 second. So it will be difficult for me to give such ballpark number. You can connect me separately, and I'll definitely answer your question.
Sure, sir. So second is on the Sener subsidiary. Sir, if you can explain how does the business happen here? I mean, so do we just send the inventory to the subsidiary, and if there is a currency depreciation, the impact we directly take it on the P&L? So how is the business which happens? Because in this quarter we had seen an 18 crore of impairment. Just want to understand, so since it is a marketing subsidiary, so we just send the inventory, and because of that currency fluctuation, do we have to directly book it on the P&L, or how is the thing which are happening here?
See, in Sener, as you have mentioned, we supply high strength dyestuff over there, and then it distribute locally as well as it do export to nearby countries. So when we started this business, rather when we acquired this company, 70%, 80%, at that time volume was about 100 metric ton per month, which we have increased, though there is a COVID, we have increased it by about 150%. And last year's average volume was about 251 metric ton per month. Now, whenever there is increase in volume, there is additional requirement of working capital. At the same time, important to note is that over there, industry practice of credit days is much higher than what is prevailing in India. So Earlier it was about 8 to 12 month credit period was there. So because of that, fund blockage is much higher. And at the same time, Senar Boya buy from India, from Bodal or some other supplier on credit terms. So there is the credit of say about 5 to 6 months. So when Senar Boya import on credit basis, so it has a open credit in dollar terms. So when dollar versus lira fluctuation is there, so there is a loss. At the same time, when they sell to local and when they recover lira and use that fund for supply to importer, so that loss is there. At the same time, Senar Boya has taken a loan of about 4.1 million from Bodal. So because of accounting standard, we are required to pass an entry of M2M losses. So when we given the loan, at that time currency rate was different and then depreciation was there. So because of mainly loan and trade credit, which was open with Senar Boya, this loss was there. Another thing, for your earlier question, I could able to find out the value of freight and handling charges. There is the increase of about 8 crore on quarter basis. So earlier it was about 9 crore, which has moved to about 17 crore.
Yes, sir. Got it, sir. Sir, if you can highlight to this, in Senar Boya, you had said that so 100 TPM was the start and that you ramped up to around 250 TPM. So what is the current run rate now?
It is about in the same range, 250 to 275 metric ton per annum. So we are focusing at present to find out the solution for this forex loss, and then we will ramp up our sales over there. This is what we are presently focusing.
Okay, got it. Sir, on the SPS processes part, we are witnessing an increase in revenue, and that is definitely led by the vinyl sulfone plant operational. But on the bottom line, still we are not able, so we are not seeing the profit despite increasing the vinyl sulfone prices. Means it was a good time when your plant is ramping up and the prices of vinyl sulfone are also going up. But still that is not witnessed in the bottom line. So if you can highlight what is the reason for it and what is the loss for this quarter from SPS process, if that figure you can give.
Yeah, sure. Vinyl sulfone plant has started just in last week only. So last quarter's performance, vinyl sulfone's contribution was not there. Last year we did better top line because some stock was lying at the quarter end 30th September, and at the same time prices of finished good as well as raw material. See, earlier before 6 months or so, HSD prices were in the range of 370 to 400 or something like that, which has moved to near 485 to 500. So there is a jump in raw material as well as finished good prices. So that's why there is the increase in turnover, and some stock which was lying at the quarter start that we could sell. That's why sales is there. And profitability will definitely start now, because last week we have started vinyl sulfone production, and if we may consider this month and next month for stabilization, then from April onward it will start giving effect as far as bottom line and the top line both.
Okay, got it, sir. Sir, on the demand side, if I get to know, so what you're telling that the demand in the textiles has moved a bit, and that has led to increased demand in the dye stuffs, and that change is linked to dye intermediate, so dye intermediate prices are also moving. So just want to know, is this a global phenomena we are witnessing that demand has increased over the last quarter, or this is particularly so linked to India only because of the China, all these factors, India has benefited? Or this is a global phenomena where we are witnessing that demand is going up, so this could sustain over the coming quarters. So what is your view on this, particularly on the demand side?
So in dye stuff, it is always linked with the global demand because there is a parallel business, that is there compared to the domestic business. So I would say that because I think globally things came back very close to normal times. I think overall consumption and overall demand of almost everything has increased. And I think so similar, I think that is the reason why, this good demand in the textile has come out. And so the demand domestically is good, and it's also internationally the demand is good in the textile dominating nations.
Okay, so this demand, are we factoring this to continue? Because what I'm trying to understand now, considering that the crude has also moved to around $95 a barrel, how you see if suppose it crosses a certain level considering $100, would you start to see the demand destruction to take place, or you see this to continue going ahead also, what demand we are witnessing right now?
We expect the demand to continue to be strong, at least for another 2 to 3 quarters. Because even in this recent COVID wave, we can see that countries are getting back to normal times, and the governments, European governments are not taking up the restrictions, though there are cases. So I think now the threat of pandemic or threat of COVID, has really changed in this last couple of months, where people are treating it as like a normal, normal illness, or at least much easier than previously, maybe last year. So because of that, I think the normal life is going to be I don't think it will be affected like it did a couple of times in past few quarters. So that should really help the overall business practice, where the demand should continue, and and there should not be many hurdles to do the business globally.
Okay, sir. If I can squeeze in one last question, sir.
Sorry to interrupt, Mr. Aditya, but maybe we request you to please return to the queue for a follow-up questions, as we have several participants waiting in the queue for their turn. Thank you. Next question is from the line of Tejas Shah from Unique Stock Growth. Please go ahead.
Yeah. This Turkish lira loss what we had last quarter, so is the currency fluctuation still going to damage it, or how is the scenario right now?
So at the close of the quarter, the US dollar to Turkish lira was around 13. Currently it is at around 13.5. But we have already taken steps to avoid that in future. There are, what we are doing is, earlier we used to sell it as on credit terms from Bodal Chemicals India to Senar Turkey, which we have stopped and plan to convert the entire business on an immediate payment basis. So that amount is not exposed to any forex risk. And locally, which the fund that we need to sell domestically in Turkey and surrounding countries, where the credit period is quite long, we are taking local Turkish working capital loans. We've already got a couple of loans, and we are taking more, and which we will be using to avoid again the funding that we used to do from India. So within a couple of months, we are planning that this problem will be permanently will be eliminated. But meanwhile, like you asked, the lira at the starting of the quarter was 13, and currently it is 13.5.
Okay. Thank you. Yeah.
Thank you very much. Next question is from the line of Isha Savla from Arya Securities. Please go ahead.
Thank you for the opportunity, sir. Sir, do you pass on the inflationary pressure to customers immediately or with a lag effect? Can you provide us with some insights on pricing strategy of our products?
The pricing strategy depends more on a supply-demand front, because India and China compete in this space since many years. Dye intermediates is where China is more dominating than India and has about 70-80% share. In dye stuff, in reactive dyes, which is the majority of the production from India, there India has about 50% of the market share globally, and China has about 50%. China and other countries. So product strategy, but China usually does not export dye stuff because they have they are the largest consumer of dye stuff in the world. But intermediates is what they export, and traditionally they used to export a lot, and that is why dye intermediate space in India used to be very volatile in terms of margin. But last few years, because of these environmental issues in China, the aggressive growth has not come in China in last about 5 to 6 years, and that is why the imports have come down, and that is why there is a little consistency in the margins of dye intermediate and dye stuff players in India. And this inflation effect, we are able to usually pass it on. So for example, if our raw material prices go up, or if our utility or if our energy sources prices go up, then it is the same effect for all. So usually we are able to pass it on. And all these raw materials again also has a global scale supplies. For example, coal had gone up. So coal had gone up in India and in China as well. And similarly, some of the raw materials we have, again, they are used in China or in other countries also. So because being this international supply chain, I think the effect happens everywhere. So everybody is able to pass it on.
Okay, sir. So can you throw some light on the current scenario of coal alkali business? Like, what are the current price trend of the product and how global peers are doing? Is there any major shortage in the global market?
There is definitely a shortage globally because last 4 months there has been continuous export from Gujarat, where the majority of the chlor-alkali players are. And that is a sign, because usually caustic export doesn't happen from India. Usually there used to be some imports actually coming from Middle East and some other countries. So the situation has reversed. So that is a sign why the supply demand gap is definitely there globally. And energy prices are higher everywhere, including China, India, US and Europe. And the main raw material cost for chlor-alkali is energy, electricity. So that is one reason. And again, caustic goes into multiple sectors, and where overall manufacturing has gone up globally. So that is this is one of the feedstocks, and that's why I think the prices are remaining strong. Also, there is another factor, which is the Olympic that is happening in Beijing at the moment. Because of that, some production have been affected in that region. So that also plays a key role. That is likely to have some effect for another month or two. But even post April, I definitely see the chlor-alkali and caustic prices to remain strong for at least about 1 more year. It may not be in the range of around which currently it is 62 rupees per kg. It went all the way up to 70 also in last 2 months. But post-April, it may come down a little, but I feel that it will still remain in very strong margin levels.
Okay, sir. And sir, did we onboard any new customers recently? Can you highlight client concentration? Like how much top 5 or top 10 customers contribute to our total business?
So because we are present across, 3 sectors basically, basic chemicals caters to, agrochemicals, pharmaceuticals, overall different chemical sectors. So there, we have wide a wide variety of buyers. Like, we supply to all the leading pharma companies of India in Telangana, Andhra Pradesh, and, in Gujarat area also. We also supply to all the leading agrochemical companies of India. We also supply to all the chemical companies also, mainly in the western part of the country. In intermediates, our customers are diced up players, where more sales happen domestically because there are many diced up manufacturers here. But also there are some MNCs which are present, like Huntsman, which is an MNC, that is an American company, but they are manufacturing plants in, China, India, etc. So we supply to people like those. There are also some large players in Far East countries like Korea and Taiwan. So we export to those countries. Because of this changes in China's supply of intermediates, the situation has reversed in intermediates, and there are some export opportunities of intermediates to China also. So again, it is a wide variety of customers domestically and internationally also. And in dye stuff, there are two models. One is B2B and B2C, where last 5 years, we have been concentrating on B2C model a lot. That is why we have continuously been opening depots and warehouses across India. And we have appointed dealers, and we have our own offices and depots also, where we supply directly to the consumers. So we see a good growth there also. And acquisition of Senar in Turkey was one of the reasons why we wanted to enter. Turkey is the largest market for textiles. So that is the reason why we bought a stake in that company to convert the business from B2B to B2C. And again, dye stuff locally, dye stuff goes into MNC business also. So there are many MNCs which buy from earlier, about 10 years ago, 5 years ago, they were very aggressive and they had a lot of share. But larger companies like Bodal has been, taking that share away from, large MNCs. So that transition has been happening since few years. And so that is the current strategy.
Okay, thank you so much, sir.
Thank you.
Thank you very much. Before we take the next question, we would like to remind participants that you may press to ask a question. Next question is from the line of Gaurav Singh from Sarat Capital. Please go ahead.
Thank you, sir, for giving us an opportunity. A couple of questions. On the caustic side, were you able to see the entire benefit of price rise in the last quarter, or did you have outstanding contracts that you had to service at the existing prices?
No, so we are able to. So there are definitely some long-term customers like IOC is one of the customers in North India. Where we do contracts with HUL. We do contracts. But our volumes of those long-term customers are very less. So even when our average prices for this particular quarter and even at the moment, have been very strong. So they've always been, in the range of around 45, 46 rupees per kg.
That was for December quarter.
For the December quarter, it was between 40 and 45 rupees.
And as we speak, it is 45 and 45 to 40. Is that right?
And currently, it's slightly higher.
Slightly higher. On an average, basically, till now for this quarter, right?
Yes.
Okay. And could you talk about the loss at SPS processor that we did last quarter gone by?
Last quarter, SPS has reported 10 lakh of profit.
Okay.
There is no loss. Yeah.
Sure. And what was the loss the quarter gone by, sir, before this?
Before this, I don't have the number, but yes, there was a loss in few crores in the September quarter.
Okay. And like you've said that, dye intermediates, there are actually now export opportunities to China instead of them, sending it to India. So would you say that, and given the competitive intensity that you said has reduced, would you say that the margins that you do right now in dye stuffs and dye intermediates of about 13 to 15%, they're stable and we won't see increasing, volatility that you used to see in the last, 10, 15 years in this space?
So we have been giving this guidance that our current business model is around 14-15% EBITDA because of our integration. I think if we had a standalone business of intermediates or dye stuff, it could be a little different, where intermediates could be a little higher. But altogether, it is around 14-15%, which we have done this year. And with the addition of this chlor-alkali, which is traditionally higher on the EBITDA side, and also the sulfuric acid and benzene derivatives, what we are doing in Saikha, that is also about 18-20% EBITDA business. So at blended, what we are trying to do is, for FY25, when all this will have a full effect, we want to end up around 17-18% blended EBITDA. But this is quite sustainable. About 14-15% for our existing business right now, I think is very much sustainable.
Sure. And this loss that we've had in Turkish subsidiary, sir, do we expect anything to happen this quarter as well, given where we stand today?
This quarter, I'll give you the numbers of the December quarter. At the beginning of the quarter, the price US dollar to lira was, I think, 8.8, and it ended at 13. So this depreciation, had a large effect. Right. And currently, the quarter started at 13. Currently, it is 13.5. So if it remains around this, then I think there will be a very, very small effect. And going into the next quarter, I think we should be able to, eliminate this particular issue. So only for this quarter, and I don't think it's going to be any substantial amount. Looking at already we are at mid-Feb. 1.5 months has already gone by. So another 1.5 months. So I think we are not looking at any big loss like we did in December quarter.
Right. And as the prices of the dyes and dye stuff, intermediates and the dye stuff have increased, probably the spreads has also increased for all of these. Are they still strong as they were in the last quarter, or have you seen them narrow down?
They are very, very much similar to the December quarter levels. They have slightly come down, but again, I think some of the raw materials also come down. We also had an issue in the coal prices, which has been slightly better. Some of the raw materials also had shot up, which have corrected. So I think we should be at about similar margins, which we did in December quarter.
And sir, on your non-caustic business, what's the capacity utilization the company is running at?
So in dye stuff and dye intermediates, we usually do around 80%. In intermediates, we do about 80% plus. Dye stuff, we usually do around 70%, which is good for us. Basic chemicals, we always do around 90%, 90-95%. And caustic, because it is an old plant and we are in the process of expanding and upgrading, it is still running at the available capacity. We are definitely running more than 90%.
But in the dye stuff and the dye intermediates, are you utilizing the entire capacity that you can, or is there still some shortage?
Yes, I would. So at 70-75% is the capacity available, I would say, because it is a batch type process. Plus there are changes because there are many shades and many different colors. So you have to change. So that also takes a lot of time. So traditionally, I would say 75% is a peak utilization on a long term average. And in intermediate, it is around 80%.
And that's also something that you're doing already, right?
Yes, that we are doing already, yes.
So basically, in your entire business, including caustic and whatever is available in caustic, you are doing 100% capacity utilization, right?
Yes.
Are there any outside SPS processors, right?
Sorry?
And this only the SPS processor part, which is to ramp up vinyl sulfone. Outside that, everything you're doing almost 100% capacity utilization.
Yeah. So in the SPS, there is already one plant, and we are adding one more plant. So when we add this one more plant, there is a good synergy of cost. It's going to reduce the cost of a particular plant. That is one of the reasons why we set up this plant. And that was one of the reasons why we acquired the stake in that company, because it had the required permissions to set up this second plant also. So both plants together, that is how all the large players have, vinyl sulfone and HSS plants together, because they internally use each other's effluents or some of the byproducts, which reduces the cost for both.
Right. So all your incremental capex is basically coming on the caustic side, where you're doing the modernization, and the benzene side. There's nothing that we expect to do in the dye stuff and dye intermediate from here on, do we?
No, at the moment, no. At the moment,
going forward, also you don't intend on increasing the dyes business, and you only want to do the benzene business. Like, what's the strategy like looking forward from there?
So in dye stuff, we are still not the largest player in India, and we are still smaller compared to some of the giants of the world, the Chinese players and all. So in dye stuff, I think we definitely see an opportunity where there are some brownfield expansions possibility at our Baroda unit, which will be cheaper, much lower in a capex part. And also, I think we definitely have some space to increase some share. We are only using around 40-45% of our intermediates captively. So the long-term goal is definitely to increase our captive consumptions and set up more dye stuff facilities. But at the moment, we have reached about 70% utilization. So I think that is a good number. But currently, our focus is definitely more on this benzene derivatives and sulfuric acid and caustic. But dye stuff, I think naturally it makes sense for us to keep growing in that space. As and when we acquire the B2B and B2C share, I think we should keep adding more capacities.
And any plans to do, since there's not a lot of industry right about the area that you are in north for caustic, so any plans to do forward integration of chlorine and try and get as much chlorine consumed in-house? Any plans on that?
So luckily, we have a HCl hydrochloric acid plant there. There are 2 plants and it's a large setup. So we are able to convert it into a captive HCl plant and sell because there's a decent market in the north. Also, there's a product called stable bleaching powder which also uses chlorine. So that we have already doubled the capacity since the acquisition. And there also we are planning to grow a little bit because it is a brownfield possibility within the same building. So we keep on, because it's a very small capex. It is not a new building or new setup. Parallelly, we are definitely exploring, it's going to be our long-term business model where we will definitely set up, chlorine consuming plants in there also. Because I think that is the best business model possible in the chlor-alkali industry. So we definitely have projects on mind, but at the moment we are committed to our Saika Greenfield projects and the expansion of the Punjab. So once that is over, and when we can, maintain our debt ratios, healthy debt ratios, and then as and when we will take the decision. But we will definitely grow more.
So right now the chlorine that you're selling at negative prices right now?
So in last one and a half month, there is some pressure on chlorine. Currently, the price in Punjab is around minus 2.5 rupees, so negative 2.5 rupees. In Gujarat, it is even worse because in Gujarat we buy a lot of chlorine for a couple of our plants. We are buying chlorine currently, so the price in Gujarat is around X plant for the manufacturers is around 5 rupees.
Negative.
Negative 5 rupees, yes. In north, it is little more comfortable, and it is at a negative 2.5.
And how much merchant chlorine are you selling, sir, then per month?
Sorry?
How much chlorine are you selling outside, not consuming inside in your plant? How much chlorine?
At the moment, we sell about 70-80 tons per day to the other consumers. But we also have 5 other chlorine consumers set up next to the plant, so where we sell via pipeline. So traditionally, that is the best way to sell chlorine. And all these large companies here in Gujarat also have similar models where the smaller capacities are set up next to the large chlor-alkali plant. So we already have that set up there. So luckily, we don't have to sell too much in the tonners, which is high in costing and more hassle.
Sure.
We are already exploring some more people, some more companies who want to set up plants next to ours. That is also in the process because when we expand, we want to have pipeline buyers.
That would be CPW like kind of people, right?
Yeah. So we have 5 CPW buyers right next to us.
Okay. Sir, I'd request that if you could solve this Turkish lira issue because it's disheartening because you did pretty well on the caustic side and all the profitability basically went down the drain in the Turkish lira. So if it could be sorted out.
Yes, we are on it. I think it is just a matter of few days, and we'll make sure that this will not, hurt us again.
Sure. Thank you so much for taking those questions. Thank you.
Thank you. Next question is from the line of Preet Membership from Wealth Advisor. Please go ahead.
Yeah, I think most of my questions are answered. The last thing that I want to know is, what kind of guidance you have in place for this quarter and for the full year?
Guidance for this quarter.
Yeah, what Ankit bhai mentioned earlier also, the prices in caustic at the same time intermediate and dye stuff are similar than what they were prevailing in the last quarter. So we are expecting kind of similar quarter this quarter.
Okay, thank you.
Yeah.
Thank you very much. Next question is from the line of Aditya from Smith. Please go ahead.
Yeah, thank you for the follow-up, sir. Sir, first question is there any shutdown which is planned in the next quarter, in this quarter, Q4?
No, there is no planned shutdown in this quarter. Last year we did took shutdown in February, but at that time we didn't take in earlier November. So this time we took shutdown in November itself. So there is no requirement to take any shutdown current quarter.
Okay. Sir, on the dye stuff part, you had said to an earlier participant that we are that 75 to 80% is the peak utilization level. I just want to confirm it, sir. In FY18 we had done around 92% utilization levels. Thereafter we had taken a plan to expand from 17,000 to around 35,000 tons. Now you are telling that this 35,000 tons, this can operate on 75% peak utilization level. If this is so, are we able to get the return on capital employed with this low level of utilization levels? And what is the and primarily, sir, what is the reason for 75% taking as the peak utilization level?
See, what you have mentioned is correct. In intermediate, we have reached to even 90+% utilization.
In dye stuffs only, sir, I'm talking of. In dye stuffs only, in FY18, we had reached around 92%.
Dye stuff, I couldn't recollect, but intermediate, yes, we have reached to that level. In dye stuff, as Ankit bhai mentioned, it's a process. If we go on changing the product, then it took a longer time. But if we produce the similar color in the same plant, continuous basis, then we can increase the utilization. Say if we dedicate one plant for say black color, then there is no requirement of any time wastage, and we can improve the better utilization.
Also, this ROC for this particular expansion that we did is I think is not bad. The reason is that that 17 to 35,000 tons expansion happened in the same complex. So initially the first phase that happened at Baroda was around 2008, and then we had the clearance to set up more, and we had already planned the second phase, so which happened around 2016-17. So that 35,000 that increased from 17 to 35 happened at a very, very less investment. And that is why I mentioned earlier that, there is still some more opportunity where we can, expand more into our dye stuff capacities at maybe, compared to the new greenfield plant, we can probably do it at around 40-50% cost.
Okay. So is there any change of a strategy which we can look in the future? Like as far as said that, so if we focus on a particular color, so we can increase the productivity and the utilization also. So currently we are making multiple colors, so that is also leading to slow ramp up of the capacity. So can we see in the near future, like we can focus on a single product, single color, which will help us to reach peak utilization level, or
no, I think more than the peak utilization, what is important for us is to convert, to gain more market share, to create even a stronger brand. I think that is more important because the bigger players are definitely, enjoying this, having their own brand around for many years, and so we are somewhere on the same track. So I think increasing that 5 or 10% more utilization will not help us that much. It may reduce the cost by a little bit, but I think our focus is definitely more on the, gaining the share and, converting some of the business to a B2C model.
Okay. So just one last question. See, sir, on the raw material prices, so which are the raw materials currently which are linked to crude? And now with the rising crude prices, are you witnessing a similar trend and can be able to pass on this crude prices rise?
So the raw materials that we buy, which are linked with crude, are normally not straight away linked with the crude price. They are definitely they go up and down with the supply and demand scenario. That is what we have experienced. So actually speaking, when crude was lower, but few months ago when there was a sudden demand for almost everything, the prices of some of our raw materials are even higher. So and now the crude has really gone up in this recent time, but the prices are either maintaining, or even some of the raw materials the prices have actually come down. So the only two products where the prices are really high is one is sulfur, and second is caustic soda, and soda is up to some extent. But they are again not linked with crude. I think sulfur is sulfur price is increasing continuously since few months because of the large consumption and large demand coming from the agriculture sector. Well, because of this, everything getting back to normal, I think agriculture is, I think short of all the supplies of globally. And other things like coal also, this disruption happened because of this sudden disturbance in the routine supplies, which happens from Australia, Indonesia, and some of the other areas. But like I said, crude definitely has an effect. I'm sure they'll be, the manufacturers of the crude-based products will definitely try to pass it on. But I think still it's still in a controlling range. It's not really increased too much. I think that their margins would still be good, and I don't think that there will be any sharp increase in some of the raw materials that are linked to crude for us.
Got it, sir. Thank you, sir. That's all.
Thank you. Next question is from the line of Ravi Mehta from Deep Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. So what I understood from the conversation on the call is that probably we are doing pretty much full capacity of what we have, and we will still add on to the some expansion in caustic and a vinyl sulfone plant to be added, and the benzene derivatives. So tactically, we can be heading towards a 2,500 crore kind of a top line in 2 years. Is that a fair assumption, or looking at the current prices, we can actually even do much better than that?
Yes, for FY23, if all the projects are streamlined and are at a full full utilization, then we can definitely do around 2,500 crores. And I think in FY25, it can go as high as about 2,800 crore also, depending again on the selling prices.
So when is this benzene derivative plant going to come on stream?
Our target is to, because there are multiple plants and because there is a lot of synergy, there are a 4-step integration. So the entire process of starting all the plants will happen in small phases. So it will take probably 4 months, 5 months to start all the plants once we start the first plant. So we are targeting to start the first plant around January. And I think around first quarter of next financial year, we should have all the plants running, and we should be at some decent utilization in the first quarter.
Okay. And the EBITDA you mentioned can go to 17-18% on a blended basis as a total business. Yes,
that is our target, to have a full effect of all these growth drivers in FY24. With the top line reaching around 2,500, 2,800 levels, and EBITDA at around 17-18% level.
And I wanted to ask on the debt side. So the debt is now, I think, around 350 crore levels. So what can be the peak once you finish this capex?
So there can be about 500 crore plus term date what we are expecting by this project end, and there can be another about 350 crore of working capital. So it can go as high as 850 to 900 crore.
Okay. Which will be peak, and then we should see the repayment from the cash flows.
Yes.
Okay. And what gives you confidence that you are not there in the benzene derivative? You think you will be able to ramp up the plant and sell it because, or is it more of internal consumption or?
So we do have a similar kind of processes which we do in our existing business. Like in the first plant of benzene derivatives is MCB, where it is very, very similar to, technology and process part is very similar to what we do already in thionyl chloride plant. Again, next part in benzene is PNCB, which is nitration. So again, we have been doing nitration since 2006 in our organization. The third step is 2,4-DCB, again it is a nitration. And PNA and MPDSA, these two products, we already have experience of manufacturing those. So I think we are doing something new, yes, but it is not completely new to us. We are also taking technologies from global players. So we are not doing something indigenous or something local. For the important part, for the critical part, we have tied up with technology providers where the orders have already been given. Some of the key equipment will be provided by them, and also the know-how. So that is why we are confident. I think that we should be able to install all these plants on time, and also ramp up the capacities on time. And it is that particular sector is definitely going through a good gap of supply and demand. That is why the prices are also very, very strong. Because of some large capacities, that have stopped in China. So last couple of years, has been very strong. Also, PNCB goes into paracetamol. So paracetamol demand is also, has been very strong. So there are many reasons why I think this sector is doing good, and I think it's very much likely that that particular sector will continue to do good.
Sure. That's helpful. Just one question was on the forex part. So what we incurred was actual or a notional mark to market, or if you can just clarify that.
Yeah, majority part is M2M. But if it remains in the same range, then it will become actual slowly and gradually.
Okay.
But if it recovers from say 13 to once again 11, 12, then there can be definitely a profit in the current quarter.
Okay. Thank you. All the best.
Yeah.
Thank you very much. Next question is a follow-up from the line of Tejas Shah from Unique Stock Growth. Please go ahead.
Yeah. What is the possibility of bad debts happening from the Turkish market?
There is almost nil possibility in Turkish market. Reason behind over there, they normally give a check when we sell, say for even 6-month credit. Then at the time of sales, they deposit the check. And over there, as per their criminal law, it's considered a very big issue if they dishonor the check. So normally nobody would like to dishonor their check. And that's why we are being rest assured that over there should not be any bad debts.
Okay. Thank you.
Yeah.
Thank you. Next question from the line of Gaurav Singh from Sarat Capital. Please go ahead.
Sir, thank you for the follow-up. I just wanted to look, this dyes intermediate and dye stuff business, you've said that, what you want to do going from here is to increase the brand presence in dye stuff. But if I were to look at your competitors, especially in the dyes intermediate space, the likes of Bulgaria Industries or pure play dye intermediate, they have done margins of around 22 to 23% this quarter. And so isn't it more profitable to do dyes intermediate rather than trying to, scale more investments towards trying to get a branded play in dye stuff?
Dye intermediates, because, about 6-7 years ago, this issues happened in China, and dye intermediate manufacturing is where the more environmental damage concerns are there, because there are a lot of effluents and a lot of treatments are required. Dye stuff is comparatively easier. So the disturbance happened in the supplies of dye intermediates. That is when I think this chemical sector turnaround started, I think. So since then, there have been many new companies, because, the HSL prices used to be 250 rupees. It, I think, went up to like 1,500 rupees and all. So there was a good phase for 2 years where the prices were just, very, very extraordinary in some of the dye intermediates. So it attracted a lot of the investments. It attracted, expansion of plants. It attracted new players in the industry. So we feel, so for example, HSL, now there are so many plants of HSL, so it doesn't go beyond a particular margin range, because anytime it goes into a good margin range, all the plants ramp up, and even there are a couple of plants which don't operate when the prices go below a certain point, a certain price. So we feel that having already 20% of market share, if we add more and more capacities of dye intermediates, I think it will definitely affect our overall margin, which we do with the current capacity utilization that we do. So even if you talk about Bulgaria, I think they have not added, though they have been doing wonderfully well in this intermediate space. They have not really added more capacities, or they have not really done any greenfield project in the intermediates. So I think that if you look at other players also, if you look at Akshar Chem, which is again there in a couple of intermediates, they added HSL, but they have not further increased vinyl sulfone or HSL capacity. Even Kiri Industries, has also been stagnant since like a few years. So even Sri Pushkar, which is again present in few intermediates, they have also not increased. So your question is valid, but then I think we all feel that there is enough capacity already here, and we have this good opportunity of converting it more, and confirming our sale of intermediates, which we can convert into dye stuff and sell. So we have another way to sell our intermediates indirectly, with more and more market share, more production of dye stuff. We have a good business, a confirmed business where we can sell dye stuff also, where again I'm selling the same intermediates that I produce.
So in a normal scenario where prices are not up and down, your dye stuff and dyes intermediates business as a whole, at optimum utilization, what's the ROC you get out of that business?
So both combined, I would say, in normal, because now last 3-4 years, there have been majority of the quarters have been normal. That big volatility stopped happening since I think 3 years now. We can do about 14-15%, I think, or with our business model, with our product range, with our integration of basic chemicals also, and also single complex theory, I think we can do about 14-15%. But I don't think that is possible for everyone if they have a similar model. But we can definitely do around 14-15%.
But shouldn't it be higher, since you've said that China's capacities are not being added there, stagnant where they are? So incrementally going forward, if there are no additional capacities coming in China and textile market is looking up, shouldn't that reflect in the ROCs of this business as well? Or do you feel like they're going to stay at this ballpark?
I think they are going to remain around this much only, because there has been continuously some expansions or smaller new units have come up in every year since few years. So that is still affecting. That is still not letting margins go beyond a point. So for example, in HSL, now any extraordinary margin I think will not happen for a long time, because there are so many capacities. Similarly, some of the other intermediates are very small in terms of overall volumes. So only acid and vinyl sulfone are the large products. All the other ones are very small. So their monthly numbers are very, very small. So there is not too much of opportunities there.
And what's the ROC you're looking at in the benzene business?
It is definitely better. Again, it is a greenfield project, so there will be some cost involved there because greenfield development.
Right.
I think is going to have some extra costs. It's not just going to be plant cost. But because currently the competitors are doing I think they are doing somewhere in the range of around 25% EBITDA levels. So
right.
We are not treating it like a 25% EBITDA, but I think traditionally if I look at their 5 or 7 year average, it is definitely around 20%. So that is what I am hoping for, to have a normal supply demand scenario and to have a normal production and normal that 18-20% EBITDA.
Which would then mean, sir, that there should be no further capital deployment in the dyes and dyes intermediate business, and everything should mostly go towards benzene. Are you on the same?
Exactly. Even in the sulfuric acid derivatives plant that we are doing, we are doing a couple of specialty derivatives there also. That also in last about 5 to 7 years, has been a very, very strong business for us. But it doesn't reflect much because it's a small portion for us, and also about 50% is captive. But now with this commercial plant that we are setting up in Saika GIDC, which is again the hub for this chemical industries at the moment, and also the upcoming entire chemical and agrochemical growth is going to take place in this PCPI only. So we are setting up a plant there, and I think that is also going to generate a good top line and bottom line numbers for us. That I think I won't be surprised if we do 20% plus EBITDA there also.
Sure. And last question on this SPS processor, you had problems around getting raw material to start this plant. Those problems are sorted now. You don't see that happening.
No, so everything is sorted. The plant is already started without any problems. But it is a batch type plant plus the synergy with the HSA plant. So I think in one or 2 months time, I think we should be able to cross 70% plus utilization of the capacity.
At that capacity utilization, what profits can we get from that plant? Since it's been running in losses for quite some time since you acquired it, what profitability can we get from a quarterly point of view from SCS?
So SCS, I think with this full year effect, the turnover can be 100 crores plus from this new capacity. I think it will be little less than our Gujarat plant. The reason is that some of the raw materials we have to take from Gujarat or Maharashtra area, and also the consumer points are also here in Gujarat mainly, or exports. So that additional logistic burden is there because of the plant is North India. But I would say we can, I think, do around 12 to 14% EBITDA level range there. Once this plant is set up, there will be some savings. There are some raw materials we are buying from outside. We are spending a lot of money on that, which will be available at free cost, coming from this new plant.
Sure. Thank you so much, sir. My questions are covered. Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management for closing remarks. Over to you.
Yeah, with this, I conclude the call, and thank you everyone for joining today on this earning call. For more queries, you can contact us or SGA team, our investor relationship advisor. We wish you all a good day and a happy weekend. Thank you.
Thank you very much, members of management. Ladies and gentlemen, on behalf of Bodal Chemicals Limited, that concludes today's